Hey YouTube, in this video we're going to go through my 8 rules of automated trading, which are rules that have either been created from painful lessons from myself or previous students. And this will really help you stay in the game if you follow them. Now if you wish to, you can go to the website links in the description below to download those rules. But if you just follow them along, have a good digest of them, and drop in the comments below if you've ever broken any of them rules yourself and the outcome. I'd be really interested to hear. And for sure, look, us sharing our experiences with one another in the comments will really help other people too. Now, if you find some value in these videos that I have started to share, because this is a new channel, I'd massively appreciate a like and a subscribe. And then there will be shortly more videos coming soon. I've got some big plans ahead. So if you want to stay up to date with Forex news, automated trading, and everything I share, please like, subscribe, and you'll get all them notifications. Okay, that's enough of that. Let's have a look at the video. Hey everyone, this is the risk mitigation rules. Now, if you haven't already done so, please pause this video, go and get a toilet break, get yourself a cup of coffee or refreshment, whatever, and come back ready to give this out. It's going to be 10 or 15 minutes long, but I need you to give it your full attention. Appreciate that sometimes I can waffle on a bit. This is super important. So please pause it here and then come back. Okay, let's go. Risk mitigation rules. These rules have been created, I've designed them over time, and they're actually lessons from previous students. And those who break these rules end up receiving what I call expensive lessons. Now, trading the Forex markets, trading is speculation, and speculation is a fancy word for gambling with increased odds. That's what we're doing. So this is where we need to acknowledge that. And regardless of how good the markets have been to us, how confident we are, we must always keep that humility that things can go wrong. So risk mitigation rules then. I'm going to elaborate on each rule, okay? Rule number 1, and the very most important, only ever trade with disposable income. That's money you can afford to lose once all your financial obligations have been met. Now, in this example, I've shared this with people in the past. You should only be trading with money you can afford to lose. And I know people go, yeah, Phil, yeah, I totally understand that. I've once in 2024, there was a bad spell and we all got, like, everyone who was trading, it was absolutely brutal. Accounts were blown at that time. That was during the UK and French elections in July, and then later on, you couldn't make it up. You had an assassination attempt in the US. So we're about to look at news events shortly, and you're going to see how political news can really impact these things. And then we had the US elections, and it was just a battering. Um, so imagine, to my surprise, when a previous student gets in touch with me and says that was my money, what I was about to use for a house deposit. Okay, that really, I wasn't angry. I was super gutted for that person, because if they had just followed rule number 1, they wouldn't have traded with that money. And look, if someone told me that they were trading with money what they've got to deposit for a house, I would have told them straight away, don't be so foolish. So please, now, irrespective of how much money you've got to one side, even if you're a multi-millionaire, if you can't trade and start off, say, with £5,000 and turn it to 10,000, then why would you try to start with 25 to turn to 50, 50 to 100, 100 to 500,000? It makes no sense. This is all about getting the skill and the discipline. And I say to people when they ask me, when am I ready to trade, or how much should I start with? I'll say to them, when you start to drive, if you were to crash a car, would you rather crash a £5,000 car or a £50,000 car? Now, again, I've had that happen before. I gave that exact advice out. I said, would you rather trade with a £5,000 car? And someone went out first time, just after they passed the test, driving 2 £25,000 cars, then getting in trouble. So please, everyone, just only trade with disposable income. And if you've not got income to trade live at the moment, if that means you just trade demo and you skill yourself up so that when the time comes when you get some money, you are best positioned and you're going to absolutely kill it. So there's no rush in this game. Number two, always withdraw your original investment. We'll be looking more into this one with the golden egg strategy, but trading Forex carries inherent risks, as I've discussed. By withdrawing your initial investment, your remaining balance remains safeguarded from further risk. So let's say I've got a 10,000 account, which you'll see with Profit Pilot. Now that was already risk-free because I actually doubled it from another, but I withdraw the 10,000 from that account, meaning the 10,000 that's left, I've already got the 10,000 back into my savings and it can be reused for something else. But the 10,000 that left is completely risk-free. So not that I want to lose £10,000, but if the worst was to happen, it's not going to pull the rug from underneath your feet. So by far, rule number one is the most important, closely followed by rule number two. When we do the golden egg strategy, we'll be talking a bit more about that. But how you withdraw it is completely up to you. You can let it double and withdraw, or I think my 10,000, I withdrew the first 4,000, took that out, and I think now I've withdrew 6,000 from that. You'll get to see that shortly in another video, and you'll get to see the live examples. So it's all relevant, and you'll be able to relate to what I'm talking here. So you can withdraw how you wish. You can withdraw at the end of every month if you wish. Totally up to you. Okay, moving on to number three. Never use the same EA with the same pairs more than once. This happened with a student. They ran an EA and they saw it doing brilliant. So in their mind, what they thought was to scale this, they ran 3 different accounts completely with the same EA running the same pairs. Now, if you can imagine here, if one gets in trouble, which it did, all 3 got in trouble. Again, they were new to the game at this point, so they never really fully understood how to get themselves out of that trouble. So, look, mentioned it previously, if you're going to crash at the beginning, would you rather crash 5 grand or 20 grand car? But this one, are you going to drive 1 car or 3? Like, just be sensible. You don't drive 3 of the same cars. If you get this one in trouble, you know, they're all going to be, and you'll be in a world of hurt. It's funny with trading, people only see the positives. You know, at the beginning, everyone's quite negative and risk averse. But once they're committed, everyone, even myself, look, we all see the positives and forget to acknowledge the what ifs, the negatives, or anything that can happen, especially when we increase our risk. So just never trade the same EA. So you've just set up Moneymaker. Now, personally, remember, it's a training bot. I wouldn't run it with 3 pairs personally, but you wouldn't run it again from 2 accounts, all with the same pairs that we just set up with the same lot sizes. Just one with the same pairs. Okay. Number 4, treat your bots like prized flowers. It's important here, dedicate a minimum of 5 minutes in the morning, afternoon, and evening to actively monitor your bots. And you need to familiarize yourself with the operations, as bots need occasional manual intervention. We'll look into that later. If you find it challenging to comprehend the functionality of a bot or knowing how to manage it effectively, it's a clear sign you're not ready to run them live. Very important that. I've had people in the past ask me questions on managing bots, running it with big accounts. I'm talking big numbers. Using a driving analogy, that's like turning up to your driving test and asking where the handbrake is. Right? So, like, if you don't know how to turn off auto trading, or if you don't know how to scale back, this all is handled later. But there's certain things it's so important that you need to know before you start to run, especially in real accounts. Yes, there's a time and a place. There's no such thing as a stupid question, but like I say, you won't go to your driving test not knowing where your handbrake was. There's some foundational basic principles that you do need in place. And if you don't know how to manage it or how it works, don't run it live, please. And when I say give it 5 minutes, it's just to log on, make sure, like we did on our earlier lesson with the daily checks, the routine checks, make sure the EA is on, you got your smiley face, you're connected, you got the correct pairs on the correct time frame. And you just do that about 3 times a day. You make sure your VPS is up and running and all good to go, because I've had people forget to do that. I forgot to do it in demo accounts, and then I look and it's a mess. So just give it 3 checks a day. Okay, manage effectively, number 5. As your bot executes more trades, your margin percent decreases, which you'll start to notice, especially on Moneymaker with the 1.0 0.1 starting lot size. You'll notice the margin's always lower. Exercise heightened vigilance when margin falls below 2000% and begin to manage effectively. Again, the managing side we're going to be coming on to with Profit Pilot. And the 2000% isn't a set in stone figure. That's just something I personally like to do. When it gets to around that position, it's worth acknowledging that you do need to manage your EA. So what I'm not saying is when it hits 2000 is to really start, panicking. And I'm also not saying 2000 is the number to choose. I'd advise minimum 2000, but if you might choose 3 or you might choose 4, and that's totally fine. This isn't a set in stone rule, and you've got to learn this yourself through your own risk appetite. But also later on when we do optimization and back testing, this is where you'll get to identify your risk appetite as well. So definitely don't go lower than 2000, because what happens then is I've had people in the past get in touch when their margin's 500%, and they've got to hang on for the ride. Then there's things you can do a lot sooner. Imagine if the Titanic spotted the iceberg 5 nautical miles earlier. It could do something. If it could take action and perform actions that could have helped avoid the iceberg if it started to turn sooner, 5 miles earlier, say. So that's what this is. It's a safety precaution, giving you an idea when to take action. Again, with the iceberg and the Titanic, it might not have guaranteed, or it could have completely missed it, or it could have took a little bit of damage, and the rest is history. So manage it effectively and keep an eye on that margin. Number 6, always run in a demo account first. Now, irrespective of your experience level, run a bot in the demo account for more than 1 month to assess its performance. Transition only to a live account only when you feel at ease with the associated risks and possess a comprehensive understanding of managing it effectively. So again, that's all about making sure you're comfortable with it. There's a lot out there. When we take a look into buying EAs online, they might immediately start paying you and you think you've found the best thing ever. And it is so hard, because I've done it. It's so hard to fight the temptation. You've been running it for a week and it's just paid you your month's salary in less than a week. And it's so hard not to think, all right, I'm going to put money in. Please just give it some time. I can't stress that enough. Number 7, reduce your lot size as your account grows. So adopting an identical risk based on your account balance is dangerous. So what do I mean here? Let's imagine you have a 10,000 account and you're running the starting lot size at 0.1, but you have a 100,000 account and your starting lot size is 1.0. In terms of relevance with the account size and the starting lot size, they're exactly the same, which means if you blew a 10 grand account with that starting lot size, you'll blow 100. So maybe what you could do is, if your 10 grand was 0.1, in this instance, reducing risk. This is just an example, and I'm not set in stone. If you had a 100 grand account, maybe instead of running it at 1.0 starting lot, run it at 0.5. So it's half of the risk of the first one. Don't worry if that doesn't make sense yet. ask me and we can go into that a bit further if you don't get it. But hopefully you understand what I'm saying here is as your account size grows, you reduce the risk that you take, so you're not worrying as much. And then number 8, for every one of these rules you break, you are taking considerably more risk. I've used this analogy before on a live call. Here in the UK, on the motorways during certain sections, they've got the keep 2 chevrons apart, right? So that means when you're traveling at 70 mile an hour, if you keep the 2 chevrons apart distance in dry driving conditions, if the car in front was to suddenly brake, that will give you enough time to react and enough distance to brake, so you hopefully avoid collision. These rules are the same. The way I operate, teaching you slow, steady and consistent, the 2 chevrons, there's always a risk there that the car in front, you could hit it. But with these rules and everything that I teach and my philosophy, it's always that you've got that distance to react and respond just in case. Now, for every rule you break, you're getting closer and closer. And in the analogy of the driving, you'd be then driving that far behind the car in wet conditions. I've seen some drive that far with icy conditions with the risks they've been taking. Needless to say, if you drove like that behind someone in a car in icy conditions, you're going to get away with it so long. And likewise, exactly the same for those. Just please take every single lesson rule here. It's so serious, especially rule number 1, and then rule number 2. Like rule number 2, right? I've had people with hundreds of thousands trading. They made hundreds of thousands. They doubled their investment. They didn't withdraw. And then when they didn't reduce the risk, number 7, and then shit hit the fan, they lost their money. Now, if shit hit the fan, but they withdrew their original investment, guess what? That would have been a horrible day, but they would have had the money back in the account to go again. So please, guys, every single rule here, this isn't, I've not just made them up. Every single rule here is to do with some pain, either from myself or from someone else, and you're getting to learn that firsthand. So please take this serious. This course is all about really saving you the pain what I've been through to get to this point, or someone else. So please, yeah, right. I said I'd waffle on for a bit, but I had to. I really had to, because when in the past, when someone's had an expensive lesson, it truly breaks my heart, especially if it could have been avoided.